Hello and welcome to another update video about FET. So on the FET chart, we have this ABC structure, A wave down, B wave up, C wave down. And that could either be all of the wave 4, which started here end of March, or we're just dealing with an A wave low. Okay, so at the moment, these are, if there is a low, which isn't even confirmed, because literally all we had was a substantial rally, but without much structure. So this is either an A wave low or all of wave 4 already. In both cases, if a low of sorts is in place, there are a few things to watch for. First of all, if it is a low, and it could be wave 4, it could be wave A, there's no way of knowing it, then this support area should hold. It's between $1.21 and $1.46. It's currently being tested. From here, we should next see a C wave rally. So we have an ABC structure to the upside. That could be wave A in the larger B wave, for example. So that is what I'm watching here at the moment, because as long as we're holding $1.21, we can go higher. Whether that's within the fifth wave or if this is just a high B wave, we will just have to see. Okay. Main takeaway is there is a support area that needs to hold to keep us going to for further upside. But also, if you consider the microstructure here, we're currently holding below a trend line, so we're still forming lower lows and lower highs. This is now FETCH.AI's chance to form a higher high and then possibly a higher low afterwards, getting back into an uptrend. And then we have a resistance area here, which is between $2.74 and $5.46. It's a huge resistance area, and I will explain why. I did that already in the previous videos. The reason is, if it's in the fifth wave, then we should also get to $5 plus anyway, right? If it's a B wave, even though they are very chameleon-like structures, it is possible that this B wave overshoots. And this is not just a possibility, it is something that we often observe if the third wave was a bit short, which it was, that the B wave then actually gets to these ideal targets for the third wave, basically, But we're actually in the fourth wave. So sometimes when the actual third wave top didn't reach the ideal targets, it did reach the minimum and everything, but if it reached only the minimum, it didn't reach the ideal, it only reached the minimum, then sometimes the B wave in that correction overshoots and gets to these targets. But we will have to see. We will have to see. At the moment, for me, it's like, okay, as long as we're holding $1.21, we can give the bulls a chance, even though if it's only short term. We've had a substantial decline from the resistance area, but essentially that is what we want. The prices are respecting the zones. So it reacted here to the 50% retracement of the last decline. And now we are coming down in what looks like a corrective pullback. So we could react here to that support zone. And then if we rally from here, we should break above the A wave high next. And should probably get into, and this is subject to change, but just above the $2 mark, just above the $2 mark. But I will take that level off again because there is no sign that we've actually bottomed. I would need to see a break above the trend line here. But we are, quite deep in that micro support. Okay, any break below $1.21 indicates that we probably never finished this decline that started end of March. So basically that possibly this fourth wave is still unfolding, or even this A wave. Again, we cannot distinguish at the moment between the yellow count and the white one, but it also doesn't matter because in both scenarios there could be a substantial increase, but that assumption will have to be revised. If there is a break below 121, it would then simply be delayed. But not the greatest microstructure anyway, not the most reliable one. I'm simply watching it at the moment. There is not enough microstructure there for me to work with, really. I just show you the potentials here, the key levels. But it's quite questionable what this exactly is here, looking at the micro. Either way, the 52-cent level is key support for this idea that this is a fourth wave. Anything below that will confirm that that FET has topped in a three-wave structure, which is always nebulous, as per Elliott wave. It's not great for the chart. So that's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.